Tired of dropping your phone or struggling to prop it up? Meet the PopSockets phone grip with expanding kickstand in black, your new must-have accessory. Don't miss out. Grab yours today. Click the link in the video description to shop now on Amazon.
Welcome to Bitcoin Bulletin, where we break down the latest news and trends in the crypto world. I'm your host, Emma, and today we're exploring a fascinating story that's got everyone buzzing: gold and Bitcoin. Imagine you're at a dinner party with some of the world's top economists and traders. The conversation turns to inflation, stagflation, and how these economic phenomena affect traditional assets like gold. You'd expect them to talk about stocks or bonds, but not so fast. These experts are discussing the surprising correlation between gold prices and Bitcoin. According to a recent study by researchers at University Name, when you look at historical data, there's a clear pattern emerging. Gold tends to appreciate in value during periods of stagflation. That's inflation combined with economic slowdowns or even deflation. This is exactly what's happening now, folks. With the US-China trade war heating up and inflation on the rise, gold prices are soaring. Now, some might say Bitcoin is just like digital gold, but does it follow the same patterns? Let's take a closer look at the numbers. Since 2020, Bitcoin has gained over 1,000% in value, while gold has risen by around 20%. That's an impressive track record for a young asset class. But here's the thing. During the 1970s, when inflation was running rampant and stagflation reigned supreme, gold prices were flying high. We're talking annualized returns of up to 30%. That's significantly above the rate of inflation. Is Bitcoin following in gold's footsteps? Only time will tell. Now, let's talk about what this means for traders. With the US dollar suffering a crisis of confidence, some are betting on Bitcoin as a safe haven asset. That's right, folks. When investors lose faith in traditional currencies like dollars, they tend to flock to alternative assets that preserve value, like gold and, you guessed it, Bitcoin. Deutsche Bank's George Saravelos puts it this way: the market is reassessing the structural attractiveness of the dollar as the world's global reserve currency and is undergoing a process of rapid de-dollarization. That's some big language, but essentially, it means traders are starting to question whether the US dollar will remain the dominant currency in international trade. And then there's Alex Kupcykevich from FX Pro. Like a rising tide, the dollar's decline is lifting other assets. In simpler terms, when the dollar goes down, its competitors, like cryptocurrencies and commodities, tend to go up. That's exactly what we're seeing play out right now. But here's a word of caution from Joel Kruger at LMAX Group. Bitcoin's correlation with US equities may have garnered excessive attention, while its ties to Federal Reserve policy and the US dollar's trajectory deserve greater scrutiny. In other words, don't get too caught up in the hype around Bitcoin just yet. So what's driving this surge in demand for Bitcoin? One key factor is expectations of steeper interest rate cuts from the Fed. With President Trump pushing for lower rates to counter the effects of his global trade war, traders are starting to anticipate a more accommodative stance from the Fed, and that's sending the dollar down and creating a tailwind for Bitcoin. In conclusion, folks, it seems like gold and Bitcoin are more connected than we ever thought possible. As inflation and stagflation take center stage, these two assets are performing in tandem. But remember, this is still a rapidly evolving space, and only time will tell which way the trend takes us next. Stay tuned to Bitcoin Bulletin for all the latest news, insights, and analysis from the world of crypto. Thanks for joining me on this journey through the world of gold and Bitcoin. If you're new here, be sure to subscribe to our newsletter and join the conversation on social media using Bitcoin Bulletin.